Anand Company Limited issued 1 lakh preference shares of rupees 10 each, payable 4 on application, 3 on allotment, 2 on first call, and 1 on the second and final call. Making our note, we know that the offered shares was 1 lakh. They've told us the company received application for all these shares. So that means applied is also going to be 1 lakh. Now, the face value of the shares is 10, and at the time of application, the amount was 4. The time of allotment is 3. First call it is 2. Second and final call it is 1. Adding it up, we get 10, which matches the face value, and now we are in a position to begin. Remember, the standard journal entries for issue of shares is bank account debit to preference share application account. Similarly, we transfer the preference share application account to preference shares account or preference shares capital account. Thereafter, we don't deal in bank first. We will start with the level. So it would be preference share allotment to preference share capital, bank to preference share allotment, and so on. We'll first put down the standard journal entries and then look at placing the numbers. The name of the company is Anand, so we can say journal entries in the books of Anand Company. We have date, we can use it for serial number, particulars, LF, and amount, debit amount in terms of rupees. Similarly, credit amount in terms of rupees. The first entry is bank account debit to preference share application account, being application money received for certain number of shares, certain number of preference shares at a certain rate per share, which we'll fill in later. The second entry is preference share application account debit to preference share capital account. Being preference share application money transferred to preference share capital account. Both of these transactions are a pair. Now we can look at the numbers. We received applications for 1 lakh preference shares at 4 rupees each. So that is 1 lakh preference shares at rupees 4 per share, giving us 4 lakhs here, 4 lakhs here. Since this is full subscription, no refund, no rejection, exactly the same number goes here and here. Now, application is the only level at which the bank account comes first and then the level comes second. From now onwards, level comes first, transfer entry comes first, and then the money is received. So when we want allotment, we will make the call for allotment. Preference share allotment account debit to preference share capital account, being allotment money due. Next entry, we receive the money, so it's going to be bank account debit to preference share allotment account, being allotment money received. Now, if we had to look at the amount, now onwards, offered is what's important. We multiply the offered amount into the allotment. 1 lakh into 3 gives us 3 lakhs. So 3 lakhs here, 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 and here. Style is going to be the same. Transfer entry first and then receipt entry. So when we were dealing with application, it is bank to level, level to capital. Now onwards, it's going to be level to capital followed by bank to level. So we have a first call and we have a second and final call. I'm going to dispense with the journal entries first and then we'll come back here and look at the amounts. So our fifth is going to be preference share first call account debit to preference share capital account being first call money due. And then of course we receive the money. So it's going to be bank account debit to reference share first call account. So the same logic applies. We used level to capital and then bank to level, being first call money received. Now second and final call. So preference share second and final call account debit to preference share capital account, being second and final call money due. And finally we receive the money. So our journal entry is going to be bank account debit to reference share second and final call account, being second and final call money received. Now for the numbers, at the time of call it is 2, so offered 2 into 1 lakh, and similarly 1 to 1 lakh. For first call it's 2 lakh, for final call it is 1 lakh. Okay, so here we are. First call 2 lakhs due as well as received. Final call is 1 lakh due as well as received. Fairly simple sum. There was no oversubscription, undersubscription, premium, cancellation. So as long as you know the standard journal entries, which is the same by the way, whether you're doing it in the case of equity share capital or preference share capital. This we are done with the question.